Hironomus, correct. Yes,
Okay, I just wanted to make sure.
no problem.
Thank you for doing this today. Appreciate you guys hopping in here. I think the new year just kind of like caught up with all of us much quicker than what we thought it was going to here. So yeah, I was telling Ira that I'm feeling a little rusty today. So we'll just have some fun conversation and try to engage the people who are joining us right now in the conversation and just kind of go from there and have a nice casual conversation. So
Sure. Sounds
thanks
great.
everybody for joining us. I see some people popping in there. I'm going to give it just like 30 seconds more or so before we get going here and let some more people hop in. So Rob, did your holiday plans include a really nice vacation or your December plans like Ira took?
Yeah, so I took off the last 2 weeks of December, so Monday was my first day back, although I was checking emails just so I wouldn't be in email jail yesterday. And my daughter is a New Year's Eve baby, so she's 12/31/10.
Oh,
So she turned 14. She doesn't realize it, but she's grounded for life on her birthday. So as she gets older, so yeah, so we had all of that, and now we're back at it, right? So I'm
yeah.
kind of feeling like you are, with only yesterday being really the first day back. I'm kind of just
Yeah.
getting all synced up again, but it came fast and furious. So I think everybody's back hitting the ground running.
Yeah, yeah, I feel that today. Yesterday was a little quieter than normal still. I was not off the entire last 2 weeks, but did take some time off myself, and it was very good for the soul as it always is. But let's just get started here. So, thanks everyone for joining us for the last week in mortgage today. I was telling the guys here that I'm feeling a little bit rusty today. This is like first back into the year, and I have with me today Rob Hironomus, who is the CRA mortgage sales manager from Fulton Mortgage Company, and Ira Selwin, which I'm sure many of you already know, who is the VP of Capital Markets at U.S. Mortgage Corporation. Thanks, guys, for doing this. Just so you know, we owe these guys a favor. Give them a round of applause in the chat or something, because the new year just started, and we were like, oh my gosh, it's Tuesday, and we have the last week in mortgage today. And we need some people to assist us with that. So they have graciously hopped on here kind of at the last minute with very little preparation whatsoever to just have a nice conversation with us about plans for 2025. So thank you for doing that for us today, guys. Do you each want to just share a little bit about your company so that people kind of understand like the company that you work for as we're talking about plans for 2025? Ira, you want to go first?
Sure. So U.S. Mortgage Corporation, we're a retail lender, 100% retail, independent mortgage banker. I've been with the company for 17 years and Fannie Freddie approved, mid-size independent mortgage banker, selling to the agencies. And yeah, that's the quick of it.
Yep. How about you, Rob? Share with us your a little bit about Fulton, which a lot of people probably, Fulton's been around for a long period of time, probably know, and then your role there as well.
Yeah, sure. So with Fulton Mortgage Company, which is a division of Fulton Bank, and yeah, I want to say that we're 140 years old now. It's absolutely crazy. So probably one of the oldest financial institutions. But we cover our markets are Eastern Pennsylvania, New Jersey, Delaware, Maryland, Virginia, and DC. We have roughly, give or take, 100 loan officers, 4 regional managers. Last year, we did about 3,000 transactions, which everybody knows that's kind of light. Really in tune with CRA and fair lending, with specific designated CRA loan officers. We just received an outstanding. We literally just wrapped up our CRA exam, so that always keeps everybody on their toes. just received the outstanding. I think I hopefully I'm allowed to share that. So I think it's public knowledge at this point. But if not, I just let the cat out of the bag. It's not a bad thing. But
That's
yeah, that's
fantastic
kind of our
news.
space.
That's
Yeah.
fantastic
Well,
news. And in the CRA world, that's something that everybody is always hoping for, especially with our market being the way it is right now.
yeah, and I'll tell you, during the exam, it certainly didn't feel that way. We were kind of shocked. I mean, during the exam, I was kind of like, boy, we're going to get hung to the wall here or something. But no, they came back. But I guess that's what they do, right? So,
Yeah. Yeah. Want to keep you on your toes. That is for sure related to any exams, but kudos to Fulton for that. You've been engaged in the CRA world long before. I mean, that's always been part of your business model.
yeah.
In working in that area. So let's start out here. So we just got over the holidays. We know that Ira has been on a fantastic trip with fabulous pictures to Iceland. But let's talk just a little bit about the holidays before we get started here. Share with me what your favorite holiday gift was. You want to go first, Rob? Holiday gift. What's the favorite
Yeah.
thing you got?
Yeah, so I would say, I'm older now in my 50s, so my wife and I don't really exchange gifts, but we do things for our daughter, and with her birthday being on New Year's Eve, it's really just that time with the family. We spend so much time with the family. Obviously, she gets things. She's 14, going on 28, so it's changed. So we're kind of out of the toy phase now and more into the clothes and pretty much everything we got for our daughter. She's like, so we'll be spending some time in the stores making some returns. So I know that wasn't exciting, but
just so you know, that's normal. That's normal. You're just hitting the brink of that normalness at 14. There's some other people on the call here I know that can share those stories with you. How about you, Ira? Favorite holiday gift?
Yeah, I mean, as you said, my wife and I are dinkwads, so we spend on ourselves. So we usually try and do some type of experience versus like, just a regular gift. So as you mentioned, we did vacation this year. That was sort of a last minute plan. We usually plan out vacations further out, but this was a last minute return trip to Iceland. So if anyone needs any advice on where to go or experiences, feel free to reach out.
It looked like you had a fabulous time and it looked like a great place to explore a little bit. So appreciate that. Okay, so what we're going to do today, we are going to, and we would love for people who are in our audience, please chime in your responses to the things that we're going to talk about in the chat. We would love to have an understanding of where globally the TMC family is related to heading into 2025. For those of you who don't know, we do a post out to all of our lender members and ask them to respond to the similar things to what we're going to talk about today, because it's a way for us to understand what is most important to our lender membership, what they want to talk about together at our conferences collaboratively, and all of those things. So for those of you that get our Last Week in Mortgage Today distribution, if you have not completed the questionnaire that is going to be posted out there with a link for us, please do that. We really do. We go back to it multiple times throughout the beginning of the year. We do it twice a year to plan for the things that are most important to our membership. So please do that for us if you get a chance. And if somebody on here wants to post the link to it in the chat and you have it available, someone from my team on here, please, you can do that as well if you've got it up in front of you. So quick recap of what's going on in the industry right now, what we're seeing. Obviously, we have a new administration that will be coming in very quickly here. I think that will change some things. But in talking about the greatest amount of risk or least amount of risk to your business going into 2025, here's some options for you. And then if you'll just share what you think like the riskiest thing is to your business during 2025. Lower loan volume and prolonged market conditions. Lack of housing inventory and home affordability, the rising cost of services tied to origination, increased regulation and the cost of compliance, maximizing your tech stack, increased credit related risk, or AI related implicit bias. Rob, share with us, out of those things, do you think one of those sticks out as being like the most risky to your business as part of a mortgage company that's part of a bank?
Yeah, so is there a D or an E, all of the above? Because I think you kind of hit on every spot, right? Um, yeah, I think we all see it. You know, it's still in the same space. You know, the rates up and down, volume a little soft. I don't think 2025 is going to be worse than 2024 or 2023. I mean, everyone's predicting a slight increase in volume. You know, I know for us, it's always trying to really keep our ear to the ground, be innovative, take a look at our internal staff. I know this past fall, we really did some internal restructuring to be more efficient, to be tighter, to really hold people to some of the standard expectations. And sometimes that could be hard because you have people that may have a history or a track record of doing, you know, an okay job. I would say those middle performers. But then when the market turns and they're dragging, you know, you kind of have to make that judgment call. Or is this, or do we have the right people and the right positions to fulfill it? So, you know, we did have to go through a lot of those decisions, but I think every single one of those is really something that you have to keep your thumb on the pulse of.
Yeah. Yeah. It's just a matter of where you prioritize them, I think, in your business for sure. Ira, hop in. Does it look any different as an IMB? What from, you know, the seat that you sit at US Mortgage Corp, what do you think is like the most risky?
Yeah, as Rob said, you know, you can sort of do the all of the above. I think from where I sit, I still see, you know, overall the lower loan volume and the market conditions. I mean, a little less the market. The market conditions are always going to be around, but generally the lower loan volume combined with the lock-in effect, um, you know, I think is the number one problem that I see from a business perspective, from an industry perspective. I still think that the housing inventory and the affordability is the major hurdle that no one has an answer for. And I know there's been advancements in ADUs and manufactured homes and things of that nature, but when we talk large scale, we still haven't seen anything that's really making a big dent, or that's going to make a big dent in the housing, you know, affordability and the inventory piece. So sort of those two combined things, I would rank one and two. Um, Obviously, cost of services, you know, is going to roll into that home affordability, but that's something we're sort of probably always going to deal with, the increases in costs that are just going to get passed on to the consumer. So um, those are sort of my probably my top three that I would
Yeah.
name.
I think the lack of housing inventory and home affordability is like the biggest one that probably I hear very, very consistently across the network. Um, Although all of them are on there for a reason, and kind of ranked the way that they ranked. And I think it's because of what you just said. There's no one easy answer to fix that one. So there's not somebody that's going to come in, or they would have done it already, with like this one thing that's going to like fix everything. It seems like it's all of these little incremental changes that are maybe having somewhat of an impact, but it's almost like you need the perfect storm of all these other things to happen, to help make those have a much bigger impact on what's going on out there in the industry as a whole. Um, Themes of things that are most important to your company. So let's talk about these a little bit. Again, rank these as like, give me what you think the most important thing at your company is. Strategic alignment of your team in the right roles, creating a culture that attracts and retains employees, incorporating data-driven strategies in your decision-making, compliance and the associated risks, ways to drive more revenue, or business development opportunities to grow volume and market share. Ira, you want to take that one first this time?
Sure, sure. So I mean, you're always going to want to have that culture in the company. You want to attract and retain employees. But again, with the business development, you do want to grow some market, and especially in this lower volume environment that we're in, growing the company, expanding the company out to other markets where you may not have been before. Driving, which does drive more revenue to the company, um, can help diffuse some of the other issues that you're facing. Obviously, as we mentioned, costs going up, including the compliance risks and costs of compliance and things of that nature. And as you expand that company, I feel like it is a positive to the culture when the company sees that you're expanding and you're adding additional sales employees and new branches and new states. It's a nice way to get everyone sort of on the same page and buying into that culture.
And you do have a strong culture. You always have. I have known Stephen A for years because I used to call on you guys when I was in the QC arena. But that your motto there has always been employees for life, kind of. And you've been there 17 years, did you say?
Yeah, 17 years this January, this month. So it's kind of amazing to see the growth in that 17 years. And it also, from a growth perspective, it also, you do have risks if you do not expand. Thinking back years ago when we had Superstorm Sandy, and had we not expanded when we had Superstorm Sandy, you're sort of at risk. You look at areas like Florida and with all these disaster areas that are occurring, if you do not expand and if you're sort of only located in one area, you are putting yourself at risk, that, if something does occur, that you don't have that other option for other areas to generate that revenue.
Yeah, you have all your eggs in one basket.
Yeah.
That's for sure. Yeah. Rob, how about you? What do you think what would you rank as like the most important theme for Fulton?
Yeah, I'm right there with Ira. I mean, I think that culture that attracts and retains employees. I mean, it is a good time to really look at our staff. And the good thing from a Fulton perspective is we definitely have geographies and areas where we could use more staffing. So, recruiting the right people, not just bodies, has been a real big focus. And just that culture of just continuous support. We hold regular meetings. We like to hear feedback from our loan officers, from our people that are doing it day in, day out. And it goes all the way up the management line, and we try to do things to help support them. And I think when people feel supported, they become appreciative, and they become, as I mentioned, employees for life. Like they want to stay here, they want to be with us. So simple things like even doing realtor events, pulling in our Freddie Mac partners to hold local forums. So we did some things with some of our state partners where we did events. So, state of the market housing forums where we're pulling realtors in, or other centers of influence, and trying to teach and educate people that are in our world, just in different capacities, kind of, hey, what's going on? And obviously we have the new administration coming in, which is kind of the new old administration, but what it's going to shape. So I just think that constant support is so important. And then for us, it is also that business development opportunities. We're always looking at our product set and what are other competitors offering. And that's a balance, right? Because we all know that sometimes a competitor lender will offer something that maybe is to gain some market share or get out of compliance regulatory scrutiny. But, what are sustainable long-term right things to be able to offer? And I would say that those really drive a lot of the other bullets that you have here. So ways to drive more revenue and strategic alignment of the team. So, but those are the big ones for me.
Yeah. I like that you said number two. We've got two great companies on here who both of you have had like long-term staff with you for a period of time. We do see that in a lot of our membership, but I think it's because um, people have always within the TMC family been pretty focused on culture in the employees that you bring into your organization. But I do like that you said sustainable on the product side, because I know that Ira, being in capital markets, you deal with that a lot. That people want every product that's out there, but then it takes a lot of time, effort, money to like bring a new product into your organization, and then does it get utilized? So I do think that that is something that people have begun to look at too, is like, does this make sense for our organization, even though the sales team claims that it's, the thing that's keeping them from getting volume. So I know that both of
Uh,
you probably deal with that.
Everybody wants the shiny new toy, right? So yeah.
Yeah, for sure, for sure. As far as like efficiency and profitability, I know that both of your organizations have probably looked at this over the last couple of years. What do you think is like most important to you? Is it managing your process without adding FTEs as we go into the new world? Execution strategies on the secondary market, recruiting new LOs, looking at your internal workflows and like thinking differently or trying to think differently about what those are, or modifying your tech stack. Rob, what do you think has been the most important thing related to all of those for you and for Fulton?
Yeah, so I would say on our side, tech stack, we really did a major revision to that a few years ago, and I think we're in a pretty good place there. But I would say the reimaging internal workflows of mortgage operations teams, I think we've really been taking a look at that and how can we make it tighter, better, more efficient. And, as being a loan officer for 17 years and now being on this side, I get that dynamic of, well, as a loan officer, it's my job to sell, but on an operations side, it's like, yeah, but you have to give me a file, something that I can work with, and I just constantly preach like don't make the minimum submission your maximum. And the story. So I've been pushing more and more for our teams to send in a really clean, tight file and take that extra few minutes to button it up and make it tight, so it can go smoothly through operations. So we've really been focusing more on that. A little bit of pushback from the team because again, they kind of come back to, well, that's my processor's job or that's this job, but there's a balance, right? So I think that's it. And then recruiting. I think that really is a big thing for us. Again, I think we're an advantage and a disadvantage, whereas we're pretty well known in our market, but there are some pockets, especially in Virginia and in New Jersey, where we have a lot of areas that we can fill in with hiring folks. And I think that's going to be our focus for 2025 and beyond.
Yeah. How about you, Ira?
Yeah, similar to what Rob said, obviously we're all in on the recruiting side of things and trying to expand as we mentioned earlier. But always sort of looking at your internal processes, buttoning things up, trying to get things to run smooth, and also just looking what else is out there. We've had our pricing engine, our LOS, our POS, our hedging company, and we've had these companies for 10 plus years. So, you always have to be evaluating these and just sort of not don't just be comfortable just because you've been with these companies for so long, but take another look at what's out there. And even though you may have been with these companies for a while, there may be additional technologies that are out there, additional products, or newer companies just in the space that may actually, be more beneficial. So it's sort of not being comfortable with necessarily what you have or what you've been doing. I always hate the phrase, we always have done it this way.
Me too.
So, you know, you just have to be open to change. And that's whether internal processes, new technologies, all the above. Um, and then I know one of the other items was in regards to execution strategies, the secondary market, and that's something that remains constant always. So I know we have our capital markets working groups. Figure I'll plug that while we're on here. But we're always talking on those calls about whether it be a new investor or a new execution, things of that nature. That's an ongoing conversation, all the time.
Yeah, it does seem like, especially on that side of the business, it's like whether it's people are in and out at different times depending on what their appetite for business is. But we always kind of call it, what's the flavor of the month? The flavor of the month for jumbo. Who is finding the best spot? And you're right, in that market, that's like just a continual thing that happens, whether rates are high or rates are low, or you're trying to make the most that you can with every deal that you've got. We don't have a lot of time left. We have about 4 or 5 minutes left. So I would love to just ask both of you. And thanks, Angie, for popping in. Angie, just for those of you on the call, if you're not aware of all of our working groups, she just popped in the link there so that you can see our event calendar and come and join us. It's the more the merrier for us on those. So you could have 10 people from your organization on one of those calls, and we're very happy with that. The more opinions we get, the diversity that we get, we love it when that happens. So, but I would love to hear from Ira and Rob on, like, as your companies are moving into 2025, what are your biggest three priorities that you have? What is it that you're working on right now that you think will have the biggest impact for you in 2025? Ira, you want to go first?
Yeah, and I think that number one right now is recruiting and expansion. Our team has been really, really hard at work, expanding out a little more into the West Coast, for an example, and even just in our existing regions, to bring on new branches, new divisions, new loan officers. And I think, it's really been going well, and we've seen success already, and we're already anticipating success, especially this first quarter of 2025 and throughout the rest of 2025. But there is opportunity there for recruiting and expansion. As some companies might either decide to merge or
Yeah.
no longer operate. I think there's definitely opportunity there, and we've definitely prioritized that, and we're already seeing success with that.
Merger and acquisition is definitely not going away, I don't think, for 2025. I think we'll probably continue to see some more of that. How about you, Rob? What are you guys at Fulton? What are you focused on here in early 2025 that you think will have the most impact to your business?
Yeah, so I would say, again, it goes back to recruiting, getting those people in there, and then also really focusing on coaching the current staff that we have. And that's something that I started to do a lot more in the second quarter of last year, is really do a deep dive with some of our individuals to make sure that they have the business IQ. Do they know the products inside and out? Do they understand this? Do they have that emotional IQ where they're connecting with the customers and their referral partners? And then the last one, which I have found to be the biggest one, is what I would call the sales IQ, which is helping coach them to ask for the business and to set those expectations. Because I'm sure we all have people that were like, man, I don't get it. They know the products. Everybody loves them. But, where's their business? They're not closing the deal. So that's been something that I've been focusing on too. And then the other thing is innovative product development and having conversations with our state agencies, Fannie Mae, Freddie Mac, about any pilots that we can be a part of. Seems to be a lot of talk and discussion, and some have even rolled it out now for, first generation home buyers and minority home buyers. Again, my world is that CRA and fair lending space, but just things that we can do to enhance that, because I do think that that's where, you know, and again, being a bank, because it all filters back because you're looking for accounts and all that other stuff, but that really just seems to be a big focus for us.
Yeah. Yeah. In a place where I think a lot of people are more focused now probably than ever before, because that's where you're going to see probably the biggest impact to your volume as things change a little bit. Well, it always goes by so fast. We are at the bottom of the hour. I find it so hard to believe how quickly it goes when you're just having a great conversation with a couple of friends that you have. Appreciate both of you so much for hopping on here and doing this with me today. You'll have to let our team know what we can do for you in return. Thank you, everybody, for joining us right as we get back to the first of the year. Join us again next Tuesday at the same time, as you know, maybe we'll have some new news on what we think is going to happen in the next year with a new administration coming in. So, but we will definitely be talking about industry topics and what's going on within the TMC family. So thank you, Ira. Thank you, Rob.
Thank you.
It's been a pleasure to have both of you come back anytime and let's have another conversation. Thanks everybody for joining us today.
Thank you.
Thank you very much.
Bye.